And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge Show, the show where we bring you where the action is. In the broader markets, we are continuing to see rotation. The markets have hit another new high. Lots going on by way of earnings season. We are going to review all of that and more. First up, we can take a look at some of the news items last week that did push the markets a bit. Trump did announce an AI action plan designed to keep the US in the leadership position as far as AI innovation. And that certainly gave a boost to certain areas. And we will get into that. I'll share with you the number one industry group out there at this point in time and why. There also were trade deals that were executed with Japan and the Philippines. And certainly with Japan, that was highly impactful as far as providing confidence to investors that we are moving through these trade negotiations. And it did give a big boost to auto names such as General Motors. Also, we did see home builders coming in with strong earnings. However, data later in the week did show that home sales are at the lowest level for this year. So mixed move there. We'll take a look at that housing construction chart and certainly other areas as well. And of course, last week we did have both Alphabet and Tesla reporting their earnings. We'll take a look at those two stocks. And also I'll share with you some of the key names next week. Next week is going to be very, very heavy relative to that earnings report calendar. So let's go ahead right now and take a look at these broader markets and see where did we close for the week. And here we are, a daily price chart of the S&P 500. As mentioned, we did close at a new high in price. We do still have a positive MACD, positive RSI. Now, I will note something that I did talk about back here in the beginning of July, and that is the fact that the RSI is sitting up here above 75. We closed at 76. Anything above 70 is viewed as overbought. And at that point in time, I suggested at the very least, we may see sideways price action, allowing the market to essentially set up again. And that is pretty much what took shape. And then, of course, this week's price action has us back in an overbought position. Only of note so that you can know to perhaps time entries into some of the names that you are keeping a close eye on rather than chase these names. So from here, let's go ahead and take a look at the underlying sectors in the S&P 500. And what we are going to look at here is a view of the 11 sectors using what's called the candle glance view. And that is a 2-month daily price chart view. And from here, I'm adding a relative strength indicator. I'm going to sort these sectors in descending order so that we have the stronger areas up here at the forefront in the upper left quartile here. And take a look. The S&P 500 is up here at the forefront. We did see the equal weighted S&P 500 outperform the S&P, which is going to be heavily weighted toward those M7 names. And that's good news. We are seeing a continued broadening out beyond those heavyweight tech names. And again, we want to see that. Moving through, we can see up here at the forefront, I talked about that AI boost that took place last week, and it did heavily impact the industrials and technology. And it's all about within the industrials, the need for the build out of these data centers and other heavy construction areas. And then also within technology, of course, a lot of AI related names reside there, and they did get a nice boost. As we move through, I did want to share with you that REIT stocks outperformed, up about 2.3%. However, in looking at the underlying stocks, there's not a whole lot to talk about or get excited about. I will share one name in this group that is faring well, not a REIT stock. And then moving through, let's take a look at utilities. XLU, it did in the end underperform. It was up a little less than 1%. We did have a sharp advance on Wednesday, again, AI related, the need for that energy, particularly electricity, that these companies provide. Today, I am going to share with you a couple of utility names that are due to report their earnings. It's going to be a pretty big week for this sector. And then as we move through, of course, you do want to be aware of these weaker areas and staples down here languishing. It is back up above that 50-day, but back and fill formation there. Healthcare had a very good week, up 3.5%. Not quite enough to get it up to the forefront, but it was certainly relevant. Pharmaceuticals among them, Johnson & Johnson came out with good numbers. And then also in this next segment, I'll share with you a chart of biotechs that are continuing to firm up. Definitely a risk on type of an environment with those biotechs having a very good week. Also up here, we can see materials XLB. This is going to be any number of areas. I know gold ended a little bit weak, but certainly there is still high demand in other metals, uranium among them, and you can see XLB up there at a new high in price. Also XLY, consumer discretionary. I talked about Tesla reporting the stock did pull back on their results, and a lot of it is what we saw yesterday. But the group did rebound. It was an underperformer, but not by much. I'm going to share with you a sub-industry grouping in these discretionary area that is faring quite well, and we'll look at some stocks as well. Let's go ahead and look beneath these sectors and take a look at ETFs. And these are ETFs I've known and grown to cover over the years because they're very, very helpful as far as imparting a view beyond and deep dive beneath those sectors. So again, a 2-month daily price chart view. And again, the S&P, broader S&P 500 up here at the forefront. But let's take a look at IGV, and this is the software ETF. And you can see that we are back in a nice uptrend, nice vibrancy taking place throughout this area. And there also were a couple of names that did get an AI related boost last week, but we are sitting up there at new highs. And then I did mention biotechs, IBB, up about 4.5% for the week. Here we are with a gap up on Wednesday into a new uptrend. So now it's an area, certainly from my work, that I'm going to feel more comfortable digging in and uncovering top stocks. We can see the RSI above 50 trending upward. We have that nice black line up through the red, which is confirming a new uptrend and pretty decent volume down here. Now, I will tell you, there are over 600 biotechnology stocks, and among them, only about 15 actually have earnings. So it's going to be a lot of chart-driven names that are faring quite well, not so much in the green quite yet, but still quite vibrant. Here we are with XRT. This is the retail ETF. And you can see we did pull back a little bit toward the end of the week. I'm going to share with you 2 retailers that reported earnings last week, 2 different outcomes. But net, we are in a nice uptrend here. That move into housing. Let's take a look at XHB. This is the S&P 500 Home Builders ETF. Now, this advance on Tuesday was all about earnings. I believe NVR came out with good numbers. We did see a continuation rally. However, the data that suggested that home sales are languishing, we did in fact see a pullback from that, but we are still in an uptrend here with XHB. And with that in mind, there are certain areas in the retail space that are faring well, and I will share that with you today as well. And then moving through, semiconductors did pull back last week, down about 2%. Certainly well deserved after this sharp advance that we have seen. A number of those AI-related semiconductor stocks did fare well last week. However, it was other areas that generally showed weakness. We do have still a positive RSI and a positive MACD, but on alert to note that you need to be selective as far as areas that you overweight in that industry group. And then also IHI had a pretty good week. This is the medical devices ETF, which has really been waffling and not gaining a lot of ground. It did have a pretty good week last week, earnings driven. We did see a couple of heavyweight names come out with good numbers, which is helping that particular group. And then let's go ahead and take a look at volatility. And this is what we want to see, volatility receding. We have not seen it down in this $14, $15 level. We would have to go back to early December. Now, unfortunately, we did get that pre-inaugural move where fears based on upcoming policies did push that volatility quite high. So in essence, we are at a relatively low level, keeping an eye on volatility to ensure that we don't get any surprises similar to what we did experience at the end of last year. Now, I did also want to answer a question that was posed beneath last week's video, and I want to thank you for all your comments, and questions are, of course, very welcome. And this was about international stocks, taking a look at the global markets. So I am going to share with you a couple of views, and hopefully this isn't too confusing, but I will also tell you that this is Novel Investor, and it's an international stock market performance going back to 2010. So if you're finding this a little difficult to follow, you can do this on your own. But they do keep this year-to-date information very updated, and you can see up here at the forefront in the top areas, we have these international ETFs that are up 43%, 40%, 36%. And they are primarily these smaller countries. ESP is Spain, AUT is Austria. We have Italy up here, Ireland, Germany, and so on. So you can see that we've had a nice setup year to date in a number of these areas, and they are certainly warranted. From here, we're going to move over to an asset class return, and you can see international up here at the forefront year to date, 20%. And then we can see emerging markets up next. From there, we do go down through this list. But what I did want to go ahead and share with you is a view of areas that are faring well that are not listed in either of the two areas I just showed you. First up here is MCHI, and this is China ETF. Of note is that they are also reporting earnings, and you can see that the overall Chinese stock market did break out of a very lengthy base last week. There are areas, however, that are not faring well, and there are sound reasons for that. First up is EWZ, and this is Brazil's ETF, and you can see that we have been faltering here. There's a lot going on as far as politically and economically, a lot of instability that is pushing that area lower. And then one other area that had been faring well, but is also pulling back. This is INDA, India. And this particular area, they are coming out with weaker than expected earnings. And I believe Goldman Sachs downgraded their outlook for the overall markets in India. So I did want to share that with you relative to taking a look at markets outside of the US and giving you ideas of where you might be able to garner more information. From here, let's go ahead and talk about some of those companies that reported earnings last week. I did mention Tesla came out with their numbers. The stock gapped down in response. We did get a bit of a recovery rally today. However, we are still below these key moving averages, so that downtrend does still remain. Let's take a look at Alphabet, and we can take a look at this sharp advance that it did have subsequent to earnings, and the company came in above estimates for both earnings and sales. And they also announced a very heavy-duty capital expenditure fund, or monies that they will be putting toward AI. So that was another boost for these AI related names. Last week, we can see that Google is now overbought with that RSI up above 70. A couple of well-known retail names did announce last week, and here we are with Chipotle, CMG, and the stock had already been pulling back from this downtrend reversal attempt, and then in response to the earnings, it dropped very dramatically. And this was all about same store sales. Chipotle same store sales numbers were weak and the markets were not pleased. With that, you will oftentimes see stocks that are in that same industry group also respond negatively. And we did have Kava Group pull back about 5.5% yesterday, but it too did recover into today's close. Another name in that retail space that reported but had a very bullish response. This is Decker's Outdoor, DECK, and they produce UGG boots and then also Hoka sneakers. And we can see this gap up push the stock back above that 50-day simple moving average. We have a bullish RSI, and then that MACD just dipping into positive territory. Nice high volume on today's 11% rally. And this was all about their sales internationally. Speaking of international, and their US sales remain weak, however, but they are only within their first year and a half of introducing their products overseas. So that is a growth area that could maybe continue. Keep an eye on Deckers. Now, from here, I talked about XLRE REIT stocks. Let's take a look at a company that is due to report earnings in less than 2 weeks, but certainly worth noting. This is Zillow Group, of course, the real estate listing company, and they have other subsidiaries as well. But we can see that we had this nice cup with handle base breakout. I'll take a minute here and mark this up so you can see that. So here we are with the cup and formation. And when you're looking for a cup with handle base breakout, you don't want the right side of that base to get up to that left side. It pauses. And then from there, we have this handle formation and then a nice breakout from that handle. Ideally, you do want that breakout above this high to take place on volume, but we are now a little bit overbought, but certainly a name of note. As mentioned, I did screen for actual REIT stocks and did not see much. So another phenom that moved back into play last week was a move into these meme stocks. So we can take a look at the names that are, in fact, as you may recall, prior to this current period, it was GameStop was one of the well-known names, and then also AMC Theaters. And you can see that they are not participating in this new meme activity. But let's take a look at some of those names that are, and I'll tell you what it can signal. First up is GoPro, GPRO, and you can see these explosive moves and then pullbacks. And another name that is part of that new meme stock is AEO, American Eagle, and the company announced the signing of a very famous influencer, and the stock just gapped up. Last up, we'll take a look at DNUT. These are names that just had ridiculous moves on no news. This is Krispy Kreme donut. So it does appear to be rather hit or miss as far as the names that are being targeted, but meme stocks are back in play. And relative to what that could signal, if we go back historically, let's go ahead to a weekly chart with GameStop, and you will see this is taking us to the middle area of 2024. And we did have several weeks of extreme volatility before they did eventually fizzle out. And then it was also indicative of a risk on environment. I talked about biotechs, and a move into those memes is another indication of that. So if you are thinking of putting money to work, you will want to keep that in the back of your mind. Another retailer that is faring really quite well is Wayfair. And this is a little bit about this new move into the home builders, the need to furnish those homes. We can take a look at Home Depot, and actually, I think lows. They're both a bit on the move higher, but not nearly as constructive looking as Wayfair. So, talking about these retailers and other industry groups, I'm going to share with you a view of the number one industry group, and it is utilizing Bill O'Neill's 197 industry group. He has broken the markets down beyond the sectors and really defined. For instance, in that retail group, there are 20 different subcategories. And this point in time, number two out of those 197 industry groups is the retail internet space. And from here, I'll share with you a couple of names that would fit that pro top file. Here we are with eBay that executed a nice base breakout this week into a follow-up gain. And then we also have that black line up through the red, signaling a new uptrend for eBay. Another internet retailer is DoorDash. And this is another name that's setting up really quite nicely. You can see this base formation. We are on the cusp of a possible black line up through the red, signaling a new uptrend. And I will note that eBay is due to report their earnings on Wednesday. That is something to note. That rally going into earnings, but DoorDash coming out of this base looking really quite constructive. Now, the number one industry group is alternative energy, and it did certainly move very much into the forefront with last week's AI-driven move. Here we are with Bloom Energy BE, and you can see this gap up into a base breakout and then a nice continuation rally. We have that MACD crossover taking place from a relatively low level. They are also due to report their earnings next week on Thursday. Another name in that alt energy space that did come in above estimates and then they guided their growth prospects higher. This is GE Vernova. This is GE's alt energy spin off. And you can see this gap up in response to earnings. And again, a nice continuation rally. I would want to look at that weekly chart to really get a handle on how overbought it is. We are sitting up there at 83 with that RSI. We've had periods where it's gotten up to 90, but certainly notable as far as where that relative strength indicator is positioned. And then the fourth industry group out of the 197 is going to be aerospace and defense. There's a name that I've talked about here in the past. They are very much a leadership name in that drone space, which is going to be the new focus for the military in the US. And you can see this gap up on earnings and then a nice recovery. Let's take a look at a large aerospace defense name that already reported their earnings as well, and that is GE Aerospace. And you can see that we did have this double bottom formation to a new high. And generally speaking, GE can be viewed as a buying opportunity on any pullback. So sitting up there really quite nicely. I also talked about the utility stocks. We can take another quick look here at that utility sector. And from here, I will share with you a number of names, but they are all due to report their earnings next week. This is American Electric Power, AEP, executing that nice base breakout on Tuesday and then really digesting that significant move. Another name we can look at is Entergy, ETR. So you can see really these utility names are in essence waking up because we did get this base breakout on Monday and then into a bit of a continuation rally, also due to report next week. FE is First Energy. And let's take a look at SO, which is Southern. And again, each of these are due to report their earnings. And so seeing these sharp advances going into earnings, it will be interesting to see how they respond to their released or reported numbers. And then last up is a smaller name that caught my eye. I am not sure if they reported earnings, but this is EchoWave, WAVE, and you can see this move back above that 200-day simple moving average. Nice MACD crossover. We are overbought. As you can imagine, pretty sharp advance for a single-digit priced stock. but again, exemplifying that move that we are seeing into both utilities and alternative energy. And next up, we will take a look at another area that was on the move, and it has been in the recent past. This is all about earnings. Boyd Gaming, BYD, came out with numbers, had a nice 4.4% advance in response. Let's take a look at that super high volume that we experienced on today's rally. From there, we can take a look at PENN, Penn National, another gaming stock that had a similar move. This is that sympathy move that I talked about, where names that are in that group have not reported earnings but are in tandem seeing a rally because of the bullishness taking place elsewhere. PENN is due to report their earnings in about 13 days. So that's a little less than 2 weeks from now. And that is it for this week. I did want to mention that I am going to be hosting a webinar next Thursday, and it's going to be all about AI related names and what to anticipate during this second wave of moves into AI related stocks and where you should focus. There will be a link below to go ahead and register. If you're unable to make it, you will receive a copy of that webinar as well. So I hope to see you there. And everyone have a fantastic weekend. Go ahead and hit that like button if you like what you've seen. And I'm going to look for you here again next Friday.